Okay. So, yeah. Good evening, class. Welcome to class this evening. And today we'll be taking a oh, somebody can also drop it on the group that the class has started. I sent a message, but you can maybe just drop it if any other person wants to join so that they can join. I know the class is being recorded, so they can always have, okay, no. You already said the class was being recorded when I joined. So yeah, I'm just going to move straight into it. So internal control. Um, when you hear internal control, what comes to mind? What is internal control to you? Oh my God. What's internal control to you? Please, anybody can unmute and speak. Oh, it's not compulsory that it's only me that is talking. Or I should just be talking and be going. Is that what you want?
It's
Okay, I should
like
just.
the efficiency
Hmm?
of an entity's um should I say internal control. That's how effective and efficient their internal audit is it department internal control, sure. That's what I can say. How efficient and effective is.
Okay. So yeah, internal control is basically a
Control.
system. Somebody was speaking.
Yeah, I just want to a layman explanation.
O-
So
Okay.
internal control is basically about ensuring that the organization's policy, procedures, and process are adhered to, like things are
Mm-hmm.
done in conformity
Mm-hmm.
with the set regulations and rules.
Mm-hmm. Mm-hmm. Very correct. So internal control is a process that is being designed to ensure that to give assurance to four things. There are four things that your internal control is supposed to give. Thank you so much, Tohib and Omotayo. So there are four things that your internal control every internal control is supposed to meet four things. Now they tell you that internal control is the whole system of control, financial or otherwise, set up by management to ensure that then what follows is these four things that have been outlined. What are you ensuring in your internal control? You ensure that there's effectiveness and efficiency of operations. You want to ensure that there's reliability in financial reporting. You want to ensure that there's compliance with applicable laws and regulation, and also that the assets of that entity is being safeguarded. So that's why they tell you that the preparing of an account and the checking for fraud and error is a management function because making sure that there's efficiency and effectiveness in your operations and as well as ensuring that your financial reporting is intact is a management function. Management is the one that is responsible for imputing or enacting the internal control of an entity. Also, we have compliance with applicable laws and regulation. So, your internal control is closely, when we talk about the types of controls that we have, we talk about compliance, compliance control, right? Like is one of the major areas of your internal control because compliance, depending on how regulated the industry is important that they are following the industry standards and that they are not doing anything that is outside the confines of what is acceptable for them as participant of that industry. That is not a role that you give to your external auditor that you will leave to your external auditor to come and do. It is a management function. We also have safeguarding of assets. Internal control also ensures that the assets that are being purchased are being properly kept, are being properly secured, and so that you can meet up with the needs that you have, right? And your shareholders' requirement. Because if you don't even have assets, you don't have anything to convert into wealth. So simply, internal control is defined as defined in accounting and auditing is the process of assuring achievement of an organization's objective in operational effectiveness, reliable reporting, compliance with laws and regulation and policies. Example, look what I say. Internal control is the whole system of control, financial or otherwise, set up by management to ensure these four things that have been outlined. So we have example here. Think about the things you do. Most of you have locks on your phone. You used to lock your WhatsApp. Abi, you lock your vehicles. You have your ATM pin. You every time you go to ShopRite and you buy something, you look at the bill and what you bought to confirm that they did not overcharge you. Some of you used to sit down with your bank statement and be looking at it that ṣé bank jí owó mi? Who used to look at their bank statements here? Who used to sit down with their bank statements? Say, they removed too much charges this month. Who used to do that? Hello? 11 people in this class and nobody is responding. Okay, no problem.
Few.
Hear you.
It's not about hearing me. I was asking if you people used to go and check your bank statements that the bank collect my 15 naira.
I don't used to
Yeah.
go back
Yeah,
and
Me,
check.
big
I
I
boy,
check
they
don't.
don't
online every
check.
time. I check at interval. I don't wait.
You check at interval, you don't wait.
I have not checked though. I'll check now. Maybe tomorrow I'll go and check.
So that's like, and that's you doing internal control too. So you don't leave your bank checks flying around. Checks are no more like import like as useful anymore, but also internal control is that if you have a child, you want your child to ask you for money before they do things. That's control. Also, you have in your place of work, your systems are passworded. You are checking the things you purchased against source documents. If you're an accountant, you are giving management their reports, and you are checking it against source documents. You lock your drawers. Anybody that works in a bank here, you know how important it is to like lock your drawers, and authorization for certain activities. So that is how we put in place internal control even in our day-to-day living. So it's important that we also apply these controls to our place of work, and they are the same way we have ethics on different level, personal ethics, professional ethics, business ethics. So internal control is on different levels. So that takes us to our next subheading, which is the component of internal control. The acronym for this is CRIM, 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 CRIM. So the C is control environment, and there are two C's, control environment and control activities, or control procedure. Then the R is risk, the entity's risk assessment. Then the I is information system. And then the M is monitoring and control. This is a very, very important subheading in this, your AAA, because when they ask you internal control, it always comes out. So what is control environment? Control environment is the overall attitude of management towards internal control and its importance to the entity. You cannot treat anything as like more important than the way management carries it. If management does not show you that financial reporting is a concern, then you cannot make sure that you cannot put in place the right procedures that allows you to be able to do what? Check your financials to be sure that they are correct and they are in place. So control environment is the overall attitude of management towards internal control. If management does not prioritize their financial statement being correct, you as an auditor or as an internal auditor or as an accountant cannot prioritize it for them. So control environment sets the tone, is the one that tells you, okay, this is what management is looking at. Guiding this asset is important to management. This area is important to management, all of that. So that is the control what environment. Number two is the entity's risk assessment. So the entity risk assessment, just to explain, let me explain control activities first. So, like we said, control environment is the attitude that management has towards internal control. What are the procedures that's like, how do we place, what's the level of importance that we place on internal control? Then control activities are now the outline procedures. So you know all these things that we listed here, you lock your home, you lock your vehicle, all the types of internal control that you have in place. Okay, there's segregation of duty, there's acceleration of performance, you have management control, you have personnel control, and all of that. Those are the control procedures, what you are doing on a day-to-day basis to make sure that the control environment that has been set by management is being followed. That's control procedures. So what is the risk management? Risk management is also a direct responsibility of your executive management. So it is them that are supposed to do a risk assessment of the overall organization and then to say, okay, how do we manage this risk? How do we stop this risk from materializing? Even if this risk materializes, how can we reduce the effects that this risk will have? So things like insurance, group life insurance, um as insurance for your assets, all of that is under internal control and is under the entity making sure that they are properly assessing their risks as well as the right ways to manage them. Okay, do they want to tolerate it? Do they want to avoid it? Do they want to tolerate it, avoid it? Do they want to reduce it? Right? And what's the last one? Do they want to treat it? So yeah, then we have the information system. This consists of your infrastructures, your software, your people, your processes, your data. Your control environment needs to make sure that all the procedures from start to finish are intact in terms of information. There must be a flow or a synergy between, that they say hardware, software, peopleware, Abi. There must be a flow between those three things. And then M, we have monitoring and control. It is only an olodo or it's only a goat that will be implementing something and then it is not working and you keep doing it the same way. If you keep doing something the same way, do you expect different results? Hmm? If you carry out
No,
something the same way, do you expect different results? So basically that's what they are trying to say here. So in monitoring and okay, yeah, yeah. So in monitoring and control, this is where all the procedure, if you put in place a particular procedure, this is how it will be moving on my screen. Yay. Now, wow. I don't do the one we pass me. Can I erase it? Erase, eraser. On my eraser. Okay, that's erase. Okay, so in monitoring and control, what are we saying? You have put in place controls, right? So the next subheading we're going to do now is the type of internal control. And this is like the two major subtopic in your internal control. Exam questions, you define the internal control. They ask you for the objective of internal control, which is the four things that we have outlined. Then they ask you for the components of your internal control and the types of internal control. So monitoring control is you have put in place procedures, these control procedures. You are supposed to make sure that you are reviewing the procedures you put in to see how effective they are. Are they effective in solving the problem that you have? Right? Are they effective in solving the problem that you have? And if not, if it is not working, do you want to consider changing those procedures just so that what it is meeting your direct need? You understand? Like a control can be very, very useful for company A and not useful for company B based on the peculiar need of that company. Every company is dynamic. So the next subheading is the type of internal control. So before I continue, can somebody just tell me the component of our internal control? What did I call the acronym? What did I call the acronym of your component of internal control?
cream.
C what? C raised to power
C-R-R-I-N.
2. I-N. Yes, C raised to power 2 R-I-N. Yeah. And you know how to explain it, right? When was control environment?
Sorry, please can you explain it again?
Explain what? Which one again?
Cream. The cream.
No. I spent a long time there. Not I can't explain the overall cream. It has the whole table. I was just asking. Cream is the component of your internal control. Every entity has the component of their internal control, which is control environments, control procedures, the entity carrying out a risk assessment, the information system, as well as monitoring the controls that have been put in place, and knowing the ones you want to add further procedures to so that they meet the objective that you have. But please, if you missed my explanation, we have talked about control environment for over 20, cream for over 15 minutes now. So it's better that you just get to the recording. Okay, please help me. Me too, I went to work today. Okay. So is this direct? Or does somebody want to? Oh, that's true. Somebody in this class can actually explain to her. Does somebody want to do that? I'm very open. Anybody? Anybody? I just explained it to you guys now. So you're telling her that you don't understand everything I said. Oh. Is that the case?
No,
Hello? And so explain it to her. She's asking a question.
to explain it, we need the full table and she will just use the video recording, and which will also need the video recording so that we're able to like do a proper refresh and get better.
Uh-uh. They are giving me Nigerian politician answer. Oh, wow. Somebody was asking for recording for 25th. Is it available now? You've
Yes.
not checked. Okay, perfect. So now we're moving to the types of internal control. The type of internal control has an acronym too. What's the acronym? I'm highlighting it. Papa Mosas B. Papa Mosas B. Papa Mosas B. So those are the types of internal control that we have. So the component is every entity has this component. The types are what are the different types of internal control that an entity can have. So the acronym for this is what? Papa Mosas. Who's Papa Mosas? We're going to look at it. The first P is personnel control. Personnel control are just controls that are put in place to make sure that you have suitable and competent staff and those people are able to discharge their duties with complete integrity. With complete integrity. In this case, we're talking about if you need round holes, you have round pegs. So personnel control is making sure that the people that you have in your organization align with the need that you want them to achieve. You don't employ people because of man, no man. People don't just come to the organization and do whatever they want, but you are recruiting and currently retaining the best fits for the role that you have employed people for. Number two is arithmetic and accounting controls. Now, arithmetic control, these are designed to ensure that all transactions are checked for arithmetical accuracy and are correctly processed in the accounting systems. So, arithmetic and accounting controls is basically where you have all this your normal financial reporting now. So everything that we do, support documentation, checking for approvals, checking the correctness of figure is under what? Arithmetic and accounting control. If you are working in the internal audit team, you are going to be checking and you're in the financial audit in the internal audit team. Arithmetic and accounting control will be one of your roles. You understand? And you'll be checking the implementation of the internal control as it relates to arithmetic and accounting controls. Now, the next P we have is physical control. Now, physical control is the one that you use to confirm the safety of the company's assets, where they are tangible, like their physical state, just to make sure that what it is intact. Physical controls, they are controls over the assets of the company. Number four is authorization and approval, and I really like this one. This is to make sure that all transactions are duly authorized and approved. You go to different places, you see in the bank, they have those stamping things. Even when they give you, like you deposit money, they'll put it on that machine that does do PAM because there's authorization and approval is very, very important to attest to the fact that this information was received by me, right? Is very, very important. Then we have management control. Management control are the ones that are being exercised by your management outside their day-to-day function. Is like controls like e.g. management setting up an internal audit function, things that happen with corporate governance, setting up a separate board, setting up committees to take on different matters, or setting up committee to also check and balance the activities of managers is management control. Then we have organizational control. This is the one that is being solved through an organogram where people have clear responsibilities, clear roles, and there is a defined line of reporting where they are aware that, okay, from me, it is for me to Omotayo, from Omotayo reports to Chioma will now report to Toib, right? So that's an organizational control. If you've ever worked in a place that they tell you that, oh no, it's just vibes, you can speak to the ED, you can go into his office, blah blah. It looks sweet from the outside, but boundaries are blessings. How many of you know that boundaries are blessings? So organogram is basically just shows you the controls that an organization has put in just so that they are able to directly allocate responsibilities to different individual, and also they are able to get direct reporting from the needed office when the time arises. So that's what Papa Mo Sa Papa Mo. So let's go to the SARS. The first S is what? Supervisory control. Now, they said, in general term, for controls, many individual controller or control loops, such within a distributed control system. Okay, it's the general term for control in many organizations. It refers to a high level of monitoring of individual process controllers, which is not necessary for the operation of each controller, but gives the operator an overall plant process view, but gives the operator an overall plant process view and allows integration of operations between controllers. So basically, it's just trying supervision control, is just making sure that like nobody stands and works in isolation. Yes, I can be independent. I can say no, I don't need supervision. I'm able to start a process from the beginning to the end without any form of support or anything like that. But at the same time, because of instances of human error, just making sure that the operation is being controlled. You want to make sure that every activity that somebody does is being supervised by another party, by the somebody checking the activity of the previous individual. Then we have segregation of duty. So segregation of duty just means having more than one individual completing a task. Um, you know, in small organizations, what have you noticed? One person, that person is one that will sell, is one that will collect money, is one that will record the money, is the one that, like, if the person decides to steal the money, it will go. Nobody will ever trace that money because there is no separation. So here I saying that it's very fundamental that there are a group of individuals. The person initiating is different from the person approving, is different from the person undertaking, and there is different from the person reviewing. Okay? The person initiating is different from the person approving, is different from the person doing the job, and is different from the person reviewing the work that has been done. Okay? Then we have acknowledgement of performance. You see why it's important that you go somewhere, they'll tell you, yeah, sign. You're just like, what am I signing? It is to acknowledge. That's why your signature is important. Everywhere you sign, you are acknowledging the fact that this process was done by you. So things like initials, you see people, all these kings and wealthy people, they have like all these seals, like all these rubber stamps. That's to tell you that this process was actually done by me. Okay. And acknowledgement of performance is very, very important. Then we have B, which is budgetary control. Budgetary control talks about the utilization of budgets to just measure costs and operations in a given period. In other words, budgetary control is a process to make sure that the goals that are being set by all these managers are being met, so that it's not just wishful thinking, but everybody's coming with very, very realistic figures. So type of internal control is what? Papa Mosas. Papa Mosas B. Papa Mosas B. So can somebody tell me their favorite control? based on not really favorites, but the one that you think is really, really important. They asked me one today. I had like a short quiz with somebody and they asked me one of these controls. So which one stands out for you?
Segregation of duties.
Hmm? Segregation of duties.
Yeah,
Hmm. I feel like
because of
segregation
the
of
maker and check. Because of the maker and checker.
yeah, because of the whole somebody should initiate, somebody should approve, somebody
Yeah.
should take. Okay, okay, good. Look at another one that is really, really important. Another one that
Outstanding
stands,
signature, that's acknowledgement of performance.
yes, yes. Acknowledgement of performance is very, very important. How they'll tell you that, like they'll tell you that if you go to a public office to submit any documents, like at least that's if there's anything I'm learning in this my role. If you are going to the bank or you're going, especially when you're going to public office, you're going to FIRS, you do not carry acknowledgement copy. You will go back. I promise you. Because what is the evidence that that's what that thing was sent to them? They receive a lot of things every day. So that stamp and all of that. And for an organization that is very, very hybrid, we don't joke with anything that is we and third party. Even if it's for you to now scan it and then put it on the drive, let everybody now have access to it. Another very important one is authorization and approval. See, approvals are very important. You'd have heard about all this bank fraud that somebody will steal 41 billion, not really billion, million. Somebody went away with this. When you look at it in retrospect, when you do a detailed breakdown, you see that what was faulted is authorization and approval. If, like, even if I'm the head of an organization and I want to travel, somebody should have to authorize. Do you understand? I should not be able to sit down and determine limits by myself. Okay, because even like CEOs, they have the limit of transaction they can approve. The ED has limits. There's some things that you want to do as an organization that approval has to come from the board. You understand? All those things are basically what checks and balance. They are internal control procedures that are just put in place so that one person will just sit down one place and clear the organization accounts, and there's no second check. There's nobody that is overviewing the person's activity at all. And this is the issue that people have with like startups, growing companies. Implementing internal control is hard because the person that is starting the company, person is the content creator, person is the marketer, the person is the finance person, the person is the logistic officer. So how exactly does that kind of person want to implement what authorization and approval in their business? So please, in case you do, even if you don't remember anything in these two chapters, don't joke with the component of internal control, which is cream, and what the type of internal control, which is what Papa Mosas be. Okay? So please, I'm going to need somebody to be reading for us. Can read, I'm listening to you.
Use of okay.
Okay.
Where should I start from?
Use of where I highlighted, yes.
Okay, use of internal control system by auditors.
Mm-hmm.
ISA 315. Understanding the entity and its environment states that the auditor should obtain an understanding of internal control relevant to the audit.
Mm-hmm.
This is used to 1. Identify types of potential misstatements. 2.
Mm-hmm.
Consider factors that affect the risk of material misstatement.
Mm-hmm.
3. Design the nature, timing, and extent of further audit processes.
Yes, thank you very much. So the way it works is that you when you even pick up before you are doing your planning, when you are doing your planning, before you, not even before you even come up with the procedures that you want to use to carry out your audit, you need to assess your internal control. Your internal control tells you whether you are using substantive testing or whether you are using your systems approach where you are able to rely on the internal control. But if you have checked the internal control, you see that it's not intact, you know that okay, you have to do substantive tests where in this case you cannot
Yes.
rely on you
Sorry,
cannot
ma.
rely. Eh?
I want to ask a question, ma.
Okay, you can ask.
Mr. Adebayo, the second lecturer, because I see we are using substantive this thing these days. Mr. Adebayo says that if you go and use substantive approach of this thing, that in this time that they will cancel it, that we should use test of detailed transaction. But I see that
Okay.
when you taught us in audit tricks and planning, you mentioned about substantive approach. And he say if we use that now, they are going to fail us. Oh. I don't know if anyone still remembers.
Yeah, that's true. I remember he
Yes, he
said.
said so.
Okay. Okay, so I don't know, is there anybody that is in practice here? Okay. So I just wanted to say that in context of exam, maybe there are some terminologies that should not be used, right? But these things are things that still come up in your everyday audit work, right? So it means the same thing. So there's test of detail, there's test of control. Test of detail is I cannot rely on the information you have given me. So I'm having to do a detailed test on your transactions before I can make any conclusions on it. The same way, what they used to call, like, I'm surprised that, but everybody has their own. Maybe he's in practice and is no longer, maybe something like balance sheet and sale of financial position. It is still the same thing, just different approach, right? So when somebody says is a substantive testing procedure, it also means that they are using test of detail to carry it out. So I think I'll just, so that we're not contradicting ourselves, I'll try and make use of the word test of detail. Okay. So basically, when you understand the state in which the internal control is, it lets you know that, okay, these are the possible misstatements, these are the risks that this organization is opened up to, and this is the nature, and then you come up with the audit plan. An audit plan is supposed to answer three questions. What is the nature of the audit you are doing? It's supposed to answer your timing requirements and the scope, which is the extent to which you are auditing. Okay, so these are the three questions that, and when you assess the internal control system, it should be able to help you answer. Okay, now when you have now realized that the internal control of an entity is weak, what do? The auditor has no duty to report on the weakness of internal control to shareholders. But according to ISA 260, which is the communication to those charged with governance, um, what he's supposed to do is to make sure that he communicates the following things to the board. So your board has a representative of your shareholders and also your non-executive directors. So what are you telling them? It's just like, oh, this is the approach and the scope of which of my audits. This is the accounting policy that we'll be using. These are the adjustments to your financial statement that could cause a material effect or a change to your current financial statements. These are material uncertainties that may cast doubt to your entity's ability to become a going concern. These are the weaknesses that we have identified in internal control, and these are the questions regarding management integrity, fraud, all of that. So when it comes to these six things, you are supposed to communicate it with those that are charged with governance. Okay, you communicate all these things through that work hard government. Why? Because people believe that, oh, audit is for managers, but you know that audit is for the benefit of shareholders, the real owners of the company. So even the concept of of talking to those that are charged with governance is just to make sure that before the audit gets to the final stage, these people that have put their money down so that the entity can run are properly in the loop. They understand, or they have the right information as to where the entity is. Okay. Now, such communication should be on a sufficiently prompt basis to enable those that are charged with governance to take appropriate action. All communication would therefore be you see what I said? It will be before the financial statement is finalized. Now, The form of communication and the addressee of the communication should be determined at an early stage. You guys will tell yourself, okay, this is what works for us. We like mails. No, we want to have physical meetings. All of that. They're supposed to agree on the style of communication that works for them. Number two, before reporting issues to the board, auditors should first discuss those matters with management. Yes, before carrying the matter to, like, now, what do you take to the board? What do you take to the board? Something that you have told management about. They did not agree. They did not agree. They did not agree and pass the journal. Carry their matter to the board. So this give management an opportunity to provide further information, explanation. Because you know that the board is like a check and balance. The board is basically a form of control to the work of executive managers. So reporting something to the board without giving management an opportunity to even explain their self is seen like you reporting the management. So next up, if possible, matter should be addressed to the audit committee or to the board if there is no audit committee. So in big organizations, you also have your audit committee. Okay. Now, third party interest in communicating to those that are charged with governance. Occasionally, those that are charged with governance may wish to provide third parties, for example, bankers or like certain government authorities, with copies of the written communication from the auditor. It is appropriate to ensure that third parties who see the communication understand that it was not prepared with the third party in mind. The report has been prepared for the sole use of the entity, and where appropriate, the parents undertaking and its auditors. It must not be disclosed to third parties, quoted or referred to without consent of the auditor, and no responsibility is assumed to the auditor by the auditor to any third party. So what else are you trying to say? The report is for the entity you are auditing. When you pick any auditor's report, one thing you will say there is independent auditor's report. This report is for the shareholders and management of Kofoshi XYZ company. That means they're telling you that these are the people that we have a direct responsibility for as it relates to these audited statements. Okay? Yes, is one of the ways that we reduce auditors' liability. Use of disclaimer, and basically just trying to tell you that when you are reporting all these things, if somebody now wants to carry the information and give it to a third party, yes, they can, but that third party does not have the right to sue you or make any legal action based off of the information in the report because it was not addressed to them. Okay? Do I still have a class?
Yes.
Yes.
Yeah, you do.
Okay. So moving on, we want to talk about the limitations of internal control. Another subheading. I told you what are the important subheadings: the objective of the internal control, these four things, the components, cream, the types, papa, mosas, and now talking about threats to internal control. They call it limitations of internal control, and they've put it in a table. There are how many? There are 6 of them. Number 1 is management override. It's quite funny because sometimes it is management that have put in place this control. I told you that establishing internal control is a management function. Management is the one that have put in place this internal control. They are still the one that we override it, because when it comes to their own process, they're like, what do you mean? Process payments will take 48 hours. No, I don't want 48 hours. Oh, I want it. No, 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 no. I want it. No, no, no. And you're like, we're the one that put in place this rule now. That's the first biggest problem or threat, things that disrupt the full application of internal control. Number 2 is human error. So all of us were not good. Today I was sending a mail. We had treated the payments and we had like over deducted tax and everything. So I just prepared the mail. I put some things in bold. And my financial advisor was like, you're a human being, remove it in bold. This mistake that we make, we not kill somebody. And all of that, because we are now making a refund and everything. And that just tell you that like this is somebody that's had like how many years experience, over 20 something, double decades experience in finance and all of that, and we still make mistakes. So the fact that there's a mistake element is a human error element in the work that anybody does. Even if accountants do mistake, there's a tendency that internal control persons will do mistake. So there's a factor that stands as human error, which is able to reduce this error, but does not mean that it will not happen. The third one we have is substance over form. Sometimes control used to look fine on paper, you know. The way it works is that for any class to hold, Christiana must send a message to Mr. Wasu. Mr. Wasu must now send a message to the group, confirm everybody's availability, then proceed to add everybody's mail to the Zoom link so that they get a notification of the class. Then Christiana will now, the control is sweet on paper, but then you ask yourself, how realistic is the implementation of this control? And that's one thing about accounting. We have rules, we have softwares. There are so much people look at it that there are so many software. How this small business is not using software? So software are great, but does it meet the exact demand of the Nigerian market? Right? So that is substance over form. Some controls may look good on paper, but because of the difficulty of it, not even difficulty, the Nigerian dynamic business environment does not allow it to be able to be implemented effectively. Then we have conflict of interest. This is where an employee's loyalty is divided, where to the detriment of the organization. So small things like you have two work that you are doing. You are an auditor, but you used to collect side gig by the side. That's also wrong. Then we have failure to anticipate certain risks. Yes, one of the things that happens with management risk assessment is management will just identify risks that are comfortable for them to see. And then before you know, a risk that they did not even think about that was possible will just materialize. And when that risk materializes, looks like every other control that they had in place was useless because you're like, how didn't you see this one? And everybody's like, hey, we're focusing on the ones that we knew that will come up. Now, maybe you have things like foreign exchange risks, and everybody's putting their ID, and everybody did not realize that the entity was open to burglary and theft, right? So when burglary and theft now happens, everybody now starts doing what? Paying close attention. I have a friend that works with UBA after this whole fire thing, and he was like the way they've been doing fire, all their sessions is about fire. How to save yourself from fire. It was like, but if the fire did not burn, you people know that it's just about fire. Now that do you understand? So basically, they may be focusing on one particular type of risks. Before now, they'll tell them, oh, you guys should go to the gym, move your body, have your steps, blah blah blah. But now there's a new risk in a new direction, and then everybody has to now move to that particular risk. When in which was where there should have been a balance of different possibilities of the company and how it can negatively affect them. Then we have collusion. This is where two or three people come together to agree to override the control. That's the thing. You can have the most perfect internal control. If people say that they will chop your eye as an entity, they will chop it clear, and nobody's gonna know. Abi? That's what happened in First Bank with that whole 40 million something. They had to sack over how many people because all of them they collected inside the money. They share money. They did not know who this one. They didn't even know why they were sharing money. Just collected the money and call and say, yeah, because look at First Bank is doing giveaway, not knowing that somebody was doing error, somebody was doing fraud. Okay, so from these limitations of internal control that I shared, do we have any question or can we proceed? One of the reasons why I like to make a class very concise too is so that you can just be going on the move and then you just play the recording and be doing your things. Yes, it's possible. It's one of the ways that you can read. Today I was going to work. I just played. There was something like it was a class that I missed for another thing. I just played it, and when I was able to listen to it, it was concise. It was straight to the point. So people are different, but yeah, that's why I like to reduce side gestations when I'm teaching, so that if you pick up the recording to listen to, it's straight to the point as well. So from these limitations, any questions? Is there anyone that you feel like is not a limitation? Is there anyone that you think should be here that is not here? Anything like that? Anything like that?
My fire on ká tó sùn lọ.
None from me.
Okay. Okay, so let's continue. So mitigating controls. Now, mitigating controls just means putting in place efforts to reduce the associated um negative effect that comes with a risk materializing. So the way risk is that you cannot finish risks. You cannot finish risks that risk will not happen at all. Even if they're teaching about fire does not mean teaching about fire does not mean that fire should happen tomorrow. There will still not be risks, but mitigating it is reducing it to an acceptable level. Okay. So that's what it means. So most mitigating risks is things like reviews, things like approvals, things like periodic surprise check, just ask for on the spot financial statements to see if the right procedures are being followed. Okay. So another part of this chapter is recording the internal control system. So this is where the matter now concerns the auditor. Okay. So we're just going to move straight to it. Move straight to it. Okay. Let me just continue. So recording the internal control system. Now, there are three major ways that we record our internal control. There are three ways that the auditor can record the internal control system. The first one is through narrative notes. The second one is through systems flowcharts. And the third one is through questionnaires. Now, let me just read it. The auditor must gain an understanding of each of the elements that makes up the entity's internal control system, that is the CRIM. So this is to enable the auditor to carry out evaluation on the system and to conduct a risk assessment. The outcome of this assessment and evaluation will establish his overall approach to the audit, whether it will be system-based or transaction-based. Do you understand what I was trying to say? Whether you are doing your test of detail or you are doing your test of controls. Okay? Now, we said the auditor's work on the internal control is therefore an important element of gathering your evidences because it influences the direction that the audit work will take, as with all other evidences, and it must be properly documented. So just moving on. Now, narrative notes is very simple. This is when you take the internal control and you write it down like a job. Do you understand? Big documents, controls, all the controls, personnel, all the whole 10. You now start explaining it. Is the limit still the same thing? Yes, they are still the same thing now. They said biggest threat, limitation in brackets. So it's the same thing. So you now carry all your internal control. You start writing it down as a note. That is narrative notes. Number two is where you draw the internal control, like a flow chart. A basic example is what we have in our organogram. It shows you the movement of or hierarchy of power that exists in that organization. That is the flow system flow chart. It is, some people prefer it because it shows the flow of work and it shows how you work with other departments and it shows where you are in the hierarchy of control as well. So that is a systemed flow chart. Okay, so a flow chart can now exist for different of your processes. You can have a flow chart for your approvals. You can have a flow chart for your financial reporting. You can have a flow chart for your segregation of duty. You understand? Just that is a diagrammatic, that's what I was looking for. A diagrammatic way of showcasing your internal control. Now, however, some expertise and one of the problems, the difference between your narrative notes and your systems flowchart is that you need some form of technical skills to be able to do a flowchart. If any of you did IT, if you're coming from AAT, you did IT where you have flowchart, or even in your PM where you have decision tree, you know how you'll be drawing. So if you cannot do that, you cannot use system flowchart to explain internal control. But with narrative notes, it's simple, it's easy to prepare. So yeah, that's one of the things. Additionally, flowchart works well when you have a standard accounting system, where there is clear structure that this is how it flows from start to finish. Then the third one is questionnaire. Now, this is one that auditors majorly use. So they are widely used by the auditor to document systems. The questionnaire is prepared in advance. A suitable use is an electronic format. So they will have set standard question and then they will send it to you. Now, there are two types of questionnaires. We have our internal control questionnaire and we have the internal control evaluation questionnaire. So we have the ICQ and we have the ICEQ. Now, what is the ICQ? You will have bring your questions. What they are answering is yes or no. Do you have to do you ask, does your boss review transaction before before you pay? Yes or no? You don't have, by the time they answer yes, no, yes, no, yes, no, you will now go and count the yes, no, and see whether what the internal control about that particular thing, whether you want to check for personnel control or you want to check for segregation of duty, you are able to know. Now, an ICQ does not only provide a means of recording, it also assists in the evaluation. When you use yes or no, you are able to have an overall picture of the entity. An ICQ above has the advantage of producing a document that is likely simple for the auditor to complete. So the questionnaire can be completed by a relatively junior member of the team. However, the questionnaire can be lengthy because you want to ask about all the controls. You know how many of you that ever come and give those plenty questions and you came too many. Abby, you start choosing anything that you want. So that is one of the major problems of an ICQ. But it is used on a face value to assess the level of control that you have in your entity. Now, how do you check your ICQ? So instead of preparing new questions, it's not practical to just look at the previous year ones, check the accuracy, and then do a further one. If they were management feedback, you just want to check whether what all the things that you raised in the previous year ICQs have been followed. You are asking questions on the ones that were weak from the previous year. Now, we now have the second one, which is the internal control evaluation questionnaire. Internal control evaluation questionnaire. So we have in recent years, the audit profession has responded to this by developing a second questionnaire that is called the Internal Control Evaluation Questionnaire. This one is now a shorter number of control questions that is used to test for weakness. ICQ is weakness traits. Is a shorter list. Like an ICQ, an ICEQ contains a shorter list of questions, which is yes or no. A questionnaire is normally designed so that yes indicates good control and no indicates weak control. Although an ICEQ typically produces a document shorter than ICQ, ICEQ may suffer disadvantage and the questions are less precise and may need more knowledge. Choosing the type of questionnaire to use is a matter of preference by the auditor and the audit firm. In the case of an ICQ, the ICEQ approach serves as a dual purpose for the auditor, both to record and both to evaluate. So this ICEQ, everything that you want to know is things that they don't have. In your ICQ, you will see some that are good, 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 good. You are asking about all the controls. They may have very good segregation of duty. You will just leave it at that. But in your ICEQ, you have shorter questions. You can just pick something like, what's the highest payment you have made without supervision? And the person just said 20 million. That's already a bad thing. Authorization and approval. So ICEQ is only, it tells you the controls that are not in place directly based off of the responses. But your ICQ is used to check the controls that are properly in place and the controls that are not properly in place. So you use it to understand the internal control, record the internal control, and also evaluate the internal control. Okay? So what are the three methods that we can use to record our internal control? What are the three? Yeah, answer. Because people, I'm seeing that people they're already zoning out. What are the three? Somebody can just unmute and speak. It's on your screen. Hello.
Narrative node, systems, flowchart,
Mhm.
and questionnaires.
Okay. So that's also an exam question. Please, please, please pay attention. So evaluating the controls and the risk assessment, having established the controls that are in place and recording them, in your working papers, the auditor will now evaluate the controls and the effectiveness. The result of this evaluation will allow the auditor to identify the control risks, which is the auditor can decide on whether he wants to do a system-based audit or if he wants to do a transaction based audit based off of his findings on the internal control that he has now evaluated. The evaluation of the accounting and control system is a two stage process. Here, the author will first ask himself, is the control effective on paper? Then number two, is it being applied correctly? So on paper, you're looking at the form, and application, you're looking at the substance. I would say substance over form. So evaluation process. The auditor should obtain a general picture of the effectiveness of the controls established by management by reviewing its documentation of the internal control. This is the evaluation on paper. On paper, it's looking at the controls indicating the weaknesses. The auditor would take a view that the audit will focus on test of transaction, which is substantive tests. People that were saying that what I'm saying is outdated, can you see that it's the same thing, right? Even in practice, you still hear these things, but maybe a better way to call them now would be test of details, see, rather than test of controls, which is what a systems-based approach. You use all these things interchangeably, actually. Okay, moving on. If the auditor's initial assessment of the internal control shows that the system is weak, then it will move straight to substantive testing and will not bother to carry out this test of controls. Even if the controls appear to be acceptable on paper, the auditor cannot rely on them, and therefore you still need to perform a system-based audit. And therefore, it can only do a system-based audit if it sees that the controls are actually working. In this situation, the next stage of the audit is to carry out tests of controls. If the controls from the outcome of the test of controls shows that they are operating effectively, then he can reduce his substantive testing, which is his test of detail. Remember that the auditor will need to perform substantive testing because of the inherent limitations of any internal control. One thing you even need to know is that in Nigeria, the first assumption is that any organization that their internal control is not intact, we have trust issues. So that's where we saw our audit from. We don't believe in ourselves like that. Not really, but we know that there's a huge tendency for things like management override. So we don't play with that assumption. So we have in view of this, ISA 330 requires substantive procedures to be carried out for each material class of transactions, their accounts balances, and the relevant disclosure. Okay. So here we have what we call a management letter. A management letter is usually presented in a column fashion detailing the weaknesses that have been observed in the client's system of internal control. Remember that this identification of this weakness is the byproduct of performing your external audit rather than the objective of the audit. So when the auditor shares a first draft with shares the auditor statement with you, it's also going to give you a management letter, all the inherent weaknesses that he has noticed. And what you're supposed to do is to respond to the management letter. Yeah, it's to be given to the board. And when you do your next year audit, that's basically where you start from. You start, no, not he go and look at the questions. If he's the one auditing you again, or even if you have a new auditor, they go to the previous management letter and see whether the feedbacks that were given were implemented. When we even get to like advanced audits, they'll tell you that if something was material in your previous year audit and it was in the management letter and that's still not been resolved, you already know that you're giving a qualified opinion. That's how serious it is. Because I cannot be talking to you and you're not listening to me. Are you a goat? That's literally was that's what they're trying to say. Like, are you a goat? Like, I told you to correct this thing the last time I came. You did not correct it, and you want a new person to come and be saying what again? Why didn't you correct the one I said that you should correct? So a last major subheading here is we're going to talk about like the whole IT system. So this is ICAN attempts at putting computer inside your AAF. So basically, they're talking about the fact that the auditor needs to take account the different types of computer-based information system that the clients may have. Your clients may use a microcomputer system, an online system, or they may use EDIs. Now, for micro system is the one that they used to have like those years where um a client will have like a desktop, and then they will have like mini computers where there will be one major central computer, then every other computer will be like you'll be receiving, what is called this thing, like you be a response point, but everything. If you, a major example of this, your microcomputer. If you ever done work at cyber cafe, that if you want to send something to the printer, you have to send it to one particular system. That's the system that's connected to the printer. Yes, that's what a micro system is. So you know, that's so funny how there are some banks that still use this micro computer system, a centralized computer, then every other one is like a backup, not really backup, but every other one receives feedback from that central computer. However, the issues that we face with micro system is that you have to really secure that centralized computer. There may be issue with like security storage or on that central computer. Um, um, because there is a wide use of the system, the microsystems in other places, approvals may be had, changes can be made to the program without due approvals, and also it is not tailored for your company. It is like an off the shelf. You just bought the software and you are using, so it may not really be tailored to your specific needs. Now, companies also use an online system, which is what a lot of people do. So this one is like a centrally held data, and everybody is a remote terminal. So that's what Microsoft have done. That's why you can work from home. You can work from anywhere. The moment all of us are on that Microsoft, there's SharePoint, there's OneDrive. We can see everything that everybody is doing. You can see who made changes last. Is even this online system was the idea behind the whole even bank sharing of information among banks, where you can be using Fidelity Bank and go and withdraw from Access Bank, and when you go back to your bank, you just know that I've withdrawn the money, because there's like a central Excel, and they've even made it better because they say allowing like data sharing. I mean, also if you just put account number, if you're using all those fintech, all those fast-paced bank, you just put account number, they'll suggest the person's name for you. How many of you have seen that? So that's because there is a centrally held data, and through remote terminals, all of them are linked in a network. Okay, so online systems have the benefit of immediate entry, immediate updating, and if you have questions, you can get immediate response to your inquiries. So that is one of the advantage of like a computer system. So we have two major controls in our online system. You have the general control and you have the application control. Now, your general control are controls that are put in place on the overall computer-based information system, on the overall. So things like what? Managing your transaction log, things like making sure that there are no changes to the software, right? Managing your transaction log, make sure that there are no changes to the software, make sure that there's firewall, making sure that you are able to. So your transaction log is what helps you to do audit trail. What's audit trail? There'll be ability to be able to follow transactions from the beginning to the end. So all these things are like general control. It's not specific to any application. Even physical safeguard of these systems, they are under general controls. Okay. Then we have application control. Now, application control is control that is specific to an application that is being used. Like when you go to different bank apps, they have different requirements. I think Zenith Bank will say you should use your account number and your password. There are some banks that you set username and password. So each of those applications have their own control. So those controls that the one I just explained now is what we call a pre-authorization control. Before you even enter into the system, this login requirement is a pre-authorization control. Then we have program checks just to make sure that the data that is being imputed into this program is what is correct, and that it is complete, audit evidence, completeness, relevance, all of that, classification, presentation, and then we have balancing. Balancing is to make sure that when these data are being uploaded from each of the remote terminals, it is being reflected immediately. So that you see something like, oh, there's an error with this bank, we cannot send money to this bank for now. All of that is a feedback to tell you that the balancing is not reflecting on an immediate basis, maybe for this bank. So that is what an application control. So we have general control, which is for the overall what computer-based information system, and then we have application control, which is specific to what each of the control application that you have in place. Now, the last one to take note of is EDIs. So EDIs, electronic data interchange, is the ability for you to turn machine language into readable language. A basic example is what you have in all the supermarkets. They'll carry the biscuits, they'll scan the back, and immediately you see a receipt that you can tender at work that, okay, this is what I went to buy. You know how crazy that is? It is through the use of EDI. So EDI allows for the electronic transmission of business documents, things like your PO, your invoices, your payroll, either within the organization or externally. So it allows for the immediate translation of documents, either from machine language to a readable language. However, there are still some problems that come with EDIs. There are some problems. If you ever gone to ShopRite and then, not ShopRite, maybe any mall, and they were supposed to print your tickets, but maybe it did not come out or something, and guess, yeah, she has already logged it, so she cannot go and reprint it and everything. If there can be loss of paper trail, If you have gone to supermarket, you have already paid, but somebody outside will still go and stick it. They will still put that thing that they are what is called that, like puncture it, and then they may get a copy. All those things is because to just avoid loss of trails. Also, what happens is that I remember how somebody would say that a good sign of somebody being a good receptionist that year was that the person can tell you how much things are in the supermarket without even going to the aisle. But now everybody, how much is this thing? I don't know. They will carry it and scan. So there may be increased dependency on computer systems. There may be of a risk of like loss or corruption of data. In the fact that everything you are doing is online, they can just hack your system and that's all. There's a security risk when it comes to transmitting data. You can carry that in and scan, and the person did not choose, maybe there are two, Safari and Safari. If the person selects Safari and it's more expensive, you may have to pay more. And also, auditors they should expect that these controls minimize the inherent risks in EDIs. So, what are the controls they are putting in place? They will try and do transmission of data, encrypt the data before it is being transmitted. So that I tell you that when you scan that code, it's just a code. It's not that everybody can see it. If you pick up the nylon from the aisle, can you see the price? No. So when that person scan that code, so that's them basically encrypting the data. You can also do what? Monitor and check your output at intervals, put in place virus protection system, have a contingency plan if anything happens to the current backup the current storage facility that you have. And just make sure that you only accept like information from verified sources, you know. So yeah, that's basically it about EDIs, the meaning, um, how you can operate it internally or externally, the problems you face, and then how you control such problems. Okay, so we have e-commerce. E-commerce is the buying and selling of things online. And one thing you need to know about e-commerce is that before anybody can buy from you, they need to trust you. Okay, before anybody can buy from you, they need to trust you. So as the volume of material transaction are being executed through e-commerce, they must continue to grow the society, just so that every associated risks are planned appropriately. So what are the areas you want to consider? Number one, if you are auditing a client that is selling online, number one, you need to understand the effect of the e-commerce activity on that business. You need to know about that business. Number two, you need to understand the nature of knowledge that you need, so that you can understand the risks that comes from that client's work, the geographical location, the client base that they have, just so that you can be able to give the right advice as it relates to that business. Then we have additional business risks arising from e-commerce, things like loss of transaction integrity, like when something's online, there's a tendency that they are not following accounting procedure, because a lot of them say they don't even know what the right procedure should be. Abi, so how can they follow the right procedure? They are just making money, they're just using Boomba to sell. Then we have um when there's a risk in e-commerce, you have things that happen where there's a tendency to lose your transaction integrity. The moment somebody knows that, I put my card on your website, and the next thing, fraud, I start that debiting money from my account, you have lost that trust like that. So it's very, very important to just have your transaction integrity, even when it comes to capitalizing. Oh, this is how much this website costs and all of that. So um just you want to make sure that even if your business is e-commerce, there's still integrity. And lastly, you have to look for a way to put in place your internal control. Even if you are carrying out e-commerce activities, you want to make sure that internal control is still in place, even if you're carrying out what's your e-commerce activity. So yeah, that's it about this chapter. So I'll just like to do an overview of the parts that are like very, very important exam questions. Although you know that this material is already a summary, so they cannot summarize it more than this. This person has done a very good job reducing the material to less than 100 pages, very intentionally, so that you can pick it up and go and be reading and just be saying that, hey, oh, this what is there. So we'll talk about the meaning of internal control, the four objectives, their components, which is cream, the types of the internal control, which is Papa Mosas, the limitation of the internal control. There are about six of them now. Then we talk about recording your internal control that is done via three means: narrative notes, systems, flowcharts, and questionnaires. And in the questionnaires, there are two types, the ICQ and the ICEQ. And then we moved on to talk about your management letter, which is a letter of weaknesses that you have outlined in the course of carrying out your audits that management is supposed to respond to. And then we said talk about the IT systems. There are three of them: your microcomputer system, your online system, and your EDIs. So there are things that you can actually read. Exam question is things that I've outlined here. They can ask you for the meaning, and then all of them have the risks that the auditor will face on each of them. So the risks that the auditor will face in an online system. Then you have in your online system, you have the types of control. They can either be general controls over the overall computer-based information system, or application over a specific information system. Then we have EDIs, translating machine language into readable language. And then you have problems that it will cause for the auditor, controls that you should put in place. And then you have the whole set of e-commerce and why it is important for the auditor to have necessary information as it relates to a client that uses an e-commerce system. Okay. So I know this is like, I'm already temporarily shutting down too. But I don't know if anybody has questions or if you want to go and read first. Chapter is short, but a lot of it has like there's a lot of past question. I can even quickly check my files now for the what do they call it, the Pathfinder. So I think I'll share the Pathfinder with you. I'll just share the questions, like practice questions from the internal control topic with you. So you can see all the times that it has been tested, but be rest assured that internal control is a very well tested chapter in skills audit. Okay. So do you have any questions for me?
No questions. Just wanted to say if you can help us with the Pathfinder, not just for the internal control, the
Okay.
general Pathfinder for AAF.
Okay. Okay,
Thank
fine.
you.
Get just enter my DM. I'll forward it to you. Okay. So yeah, that will be all for now. Thank you guys very much. I know that I've had a long day. People are already zoning out. We're already talking to ourselves. So maybe they just joined, but their spirit is no more here. Well done. But you're already here. Just make it count. Just make it count. We should have like 2 more classes and then we'll be done. If I think it's Mr. Jimo that teaches you. So if he's not using next week, we can have a class next week and maybe the next one. So just so that you can finish before like November and you can obviously start to read and prepare for yourself. Okay?
Thank you very much.
Please, can
You're
you
welcome.
send us the material?
You don't have this one that I'm using.
I don't think so.
It's on the group. Oh. Please, somebody should forward it to her, please.
Like, it has been sent before or
Yes,
was
yes,
sent today?
multiple times.
Oh,
Okay,
okay.
okay, if you are just joining the group, then you may not have it.
Okay, I'll check for it.
Okay, I'll forward it. I see it.
All right, thank you.
Yeah, you're welcome. Thank you guys very much for joining the class.
Thank you, ma'am.
See you in my next class. Yeah.
Good night, everyone.